Hi folks, Gettess here with the Market Sense for the week of March 18th, 2014. As always, the charts that come off of my software are from Gettess and their Trade Navigator. We're looking at a weekly bond market here, and you can see bonds have done very little this week. They're trading in a very, very tight range. They could conceivably go as high as 134.20, and that's kind of what I was looking for up in this area someplace. But heck, the upper moving average is 133.24. They haven't gotten to that yet. And support is down here, the middle moving average of 132.12, and they haven't got there yet either. Now, we are waiting with bated breath for Janet Yellen's first press conference Wednesday and the Fed statement that will come out before it. And chances are they'll go to at least one, if not both of those levels after that news. I really think it's probably easier to predict Warren Buffett's perfect NCAA bracket than it is to predict what the market will do on Fed days. But that's what we're looking for. They could conceivably blow out up to 134.20 or even blast down here to 130.28. Both of those are possible. You can see the last 6 weeks have pretty much been in a sideways pattern. A little more volatility lately, but still in the same general area they've been for 6 weeks. I kind of think this still looks positive. You know, after this low here, we've got a higher double bottom, and we've taken out this intermediate high. So I kind of think it still looks positive, but it doesn't mean they can't run out of gas here, and it also doesn't mean that the Fed can say something and spook them quite badly. Now, in stocks, we have a little different situation here. There was a lot of fear about what was going on in the Ukraine, and that supposedly caused a big dumping in stocks. Well, if you look at weekly or beyond, this is a weekly chart of the S&P here, you can see that dumping was really no big deal. They're down here into support, that's roughly the 1826 area. That coincides with the previous highs that they broke out above. This could still be an incredibly bullish pattern here. Now, don't get me wrong, I'm not saying we're going to 2,500 or anything like that. But it's wrong, I think, to look at this as being terribly negative just yet. The first thing we'd look for is to see them go up here into the 1870 area, which is where the upper moving average and the upper Keltner band are. And the previous high in this contract is just around 1880. So once they get going above that, boy, all bets are off. I mean, obviously 1900 would be the next target, but I really don't have a whole lot beyond that. They could get pretty frothy if they want to. If they should break back down again and take out this area, well, that might be ugly after they've already reversed up. That could be pretty ugly. And anything is possible with the Fed meeting, but it sure looks like they want to go higher to me here, and that's the two areas I'd be looking for is both 1870 and 1880 as potential resistance, and if they blow through there, oh my. So that's what we've got for you today. Hope you can find something profitable to get yourself into. Thanks for checking in to see how we're looking at things.